Here's a line you've heard 100 times. The Forex market runs 24 hours a day. And it always gets said like it's a gift. No opening bell, no closing bell, trade whenever you want. But watch what a beginner actually does with that freedom. They keep the platform open all day, they take a trade at 11 at night because the chart looked interesting, and they slowly learn the most expensive lesson in this chapter. The market being open is not the same thing as the market being worth watching. So today, we fix the clock. By the end of this video, you'll know why this market never sleeps during the week, the 4 sessions, and where they sit on one single clock. The 2 or 3 hours where almost everything really happens. The dead zone, where good setups go to die, and how to choose the window that fits your life. Because trading the right pair at the wrong hour feels exactly like trading the wrong pair. So, if this kind of content helps you, take a second to like the video, subscribe, and turn on notifications so the next lessons reach you the moment they go live. And feel free to share in the comments which topics you would like us to explore in future videos. And if you want to support the channel on a deeper level, consider becoming a member to unlock exclusive content and help keep these lessons coming. You'll also find links to our trusted partners in the description below. Using them costs you nothing, and it directly helps the channel keep producing free educational content like this. Let's fix the first small lie in that sentence. It's 24 hours a day, 5 days a week, not 7. The week opens on Sunday evening as Asia wakes up, and it closes on Friday at the New York close, 5 in the afternoon New York time. Then it genuinely stops for you. So the market isn't infinite. It's a long, continuous week with a hard start and a hard finish, and you are not required to attend all of it. Now, why does it stay open all week when the stock exchange in your country shuts at lunchtime and goes home? Because as we saw in the very first video, there is no building, no central exchange, no bell, no trading floor with a closing whistle. Forex is a network of banks, brokers, and institutions dealing directly with each other, and that network is spread across every time zone on Earth. So think of it as a relay race. When the desks in Sydney start their day, the market is open. A couple of hours later, Tokyo takes over, then London, then New York. And as New York winds down, Sydney is already opening tomorrow. Nobody closes the market. One city just hands the baton to the next, all week long. That's the whole idea, and every session rule you'll ever learn comes out of it, which means you need one clock to think in, and that clock is UTC. Your platform probably shows you server time, which is somebody else's local time, and completely useless for planning. Pick UTC as your reference. Learn your own offset once, and stop doing mental arithmetic at 6 in the morning. Every window I'm about to give you is in UTC. And here's the warning that trips people up every single year. These windows shift by 1 hour with daylight saving. Worse, countries don't change their clocks on the same date. So for a couple of weeks in spring and a couple in autumn, London and New York are an hour closer or further apart than usual, and the overlap you rely on moves. When your session times suddenly feel wrong in March or October, that's why. So here are the 4 windows in UTC. Sydney runs roughly from 2200 to 700, Tokyo from midnight to 900, London from 800 to 1700, and New York from 1300 to 2200. Look at those numbers and you can already see the relay, and you can already see where 2 of them are open at the same time. Sydney is the opening act nobody watches. It's the thinnest part of the week. Fewer participants, wider spreads, small ranges. It matters for one specific reason though. It's where the weekend gets priced in. Everything that happened while the market was closed lands here, which is why you'll sometimes see a gap between Friday's close and Monday's open. Then things settle down, and the range goes quiet again. Tokyo is what most people mean when they say the Asian session, although it's really Tokyo plus Singapore plus Hong Kong, all working at once. Its personality is orderly. Ranges tend to hold, levels tend to be respected, and moves are smaller. This is home turf for the yen, the Aussie, and the Kiwi, exactly the currencies we met in the last 2 videos. We'll spend a whole video on how to trade it. Then London opens, and the character of the day changes completely. This is the giant. Around 38% of all Forex volume in the world goes through the United Kingdom, more than any other country by a distance. The euro, the pound, the franc, and gold all come alive at once. Spreads tighten, volume jumps, and very often the direction of the entire day gets decided in the first couple of hours here. New York is the second heavyweight, and it brings the dollar with it. The American session is where the dollar and the Canadian dollar do most of their real work, and it carries something the other sessions don't, the US data window. Most of the big American economic releases land between about 1230 and 1400 UTC, which means the day's largest single moves are often scheduled in advance. But here's the part that actually matters, and most beginners miss it. The sessions themselves aren't the real story. The overlaps are. When two big financial centers are open at the same time, both sides of your pair have deep participation at once. More buyers, more sellers, tighter spreads, cleaner movement. Movement doesn't come from the clock. It comes from how many serious hands are on the market simultaneously. And one overlap towers over all the others, London and New York, roughly 1300 to 1700 UTC. For those 4 hours, the two largest centers on the planet are working the same market at the same time. This is when spreads are at their tightest, when the biggest daily ranges get built, and when a move that starts is most likely to actually go somewhere. If you only get to watch a few hours a day, this is the strongest candidate. Now, the other end of that coin, the dead zone. After New York's flow dries up in the late afternoon, and before Asia has properly woken up, the market goes thin. Volume drops, spreads widen, and price drifts sideways or pokes through levels for no good reason and comes straight back. Plenty of traders think they're bad at reading charts when the real problem is that they're reading them at the wrong hour. Which gives you the single most useful idea in this chapter. The same pair is a different animal at different times of day. GBP USD during Tokyo is a slow, narrow, uneventful chart. The exact same GBP USD 45 minutes after the London Open can move more in 1 hour than it did in the previous 8. The pair didn't change. The people trading it did. So the practical rule is simple. Trade a pair while its home market is awake. Yen, Aussie, and Kiwi pairs make sense in the Asian session. Euro, pound, franc, and gold belong to London. Dollar and Canadian dollar pairs come into their own in New York. And if you're not sure, Euro USD in the London-New York overlap is the most liquid combination of pair and hour that exists. Now, an honest caveat, because I'm not going to sell you the overlap as a miracle. Busy is not automatically better. Fast hours cut both ways. They produce bigger moves and faster reversals, and a beginner can get chopped up in the overlap just as easily as they can fall asleep in the dead zone. More movement is not the same thing as more opportunity. That distinction is important enough that it gets its own video in the next chapter. There's also one mechanical detail almost nobody explains, and it clears up a lot of confusion. Your platform closes the trading day at 5 in the afternoon New York time. That's why the daily candle on your chart doesn't start at midnight in your country. And it's why positions held through that moment get charged or paid the overnight swap, with a triple charge usually landing on Wednesday to cover the weekend. Same clock, different consequence. And one more thing that outranks all of this, the calendar beats the session. A major central bank decision or a big inflation release will wake up a dead hour instantly and make a session rule look silly. Sessions are your default setting. The economic calendar is the override. We'll build that habit properly later in the course because knowing when the market is scheduled to move is half of timing. So when should you actually watch? Not all of it. Pick one window and be there consistently, rather than being everywhere occasionally. If you want movement, take the London-New York overlap. If you want direction, take the first 2 hours of London. If your life is in Asia, take the Tokyo session and trade the pairs that live there. Consistency in one window will teach you more than 9 hours of scattered attention. And be realistic about the time zone you actually live in. Here in Brazil, at UTC-3, the London Open lands early in the morning, and the overlap falls right in the middle of the working day. So the honest answer for one person is nothing like the honest answer for another. Building your personal window around your real life is a whole chapter of this course. For now, just know the map exists. Here's your 3-minute homework. Set your charting platform's clock to UTC, or write your own offset on a sticky note. Then mark the 4 windows on it. Then open one pair on the 1-hour chart, and simply look at which candles of the day are tall and which are flat. You'll see the sessions in the price before anyone has to explain them to you again. So let's answer the question we opened with. The market runs 24 hours a day, but it does not matter for 24 hours. You should be at your screen when the currencies you trade are at home, and the desks that move them are working. And for most traders, that means the London Open through the London-New York overlap. The clock isn't a license to trade all the time. It's a filter that tells you when to bother. And now we can go session by session. In the next video, we start where the week starts, the Asian session. Which pairs actually work there? Why the ranges behave so differently? Why the pound is usually a bad idea at 3 in the morning UTC? And how traders who can only trade at night make that window pay. That's where we go next. I'll see you there, trader. So, trader, if this video brought you more clarity, like it, subscribe, and turn on notifications so the next lessons reach you. And tell me in the comments what you want me to cover next. And if you want to go deeper, you can become a member of the ComLucro trader community right here on YouTube. It unlocks exclusive content, early access, and extra tools for your development, while directly supporting the channel. You'll also find our trusted partners linked in the description. Using those links costs you nothing and helps us keep producing this kind of educational content. And remember, the mission of the ComLucro channel is simple. We help traders build clarity, confidence, and structure, so every decision is made with discipline and intention. Here you'll find complete courses built as a true trading masterclass. Liquidity, market structure, higher time frame analysis, and supply and demand. Always focused on reading price and executing with a professional mindset. We also cover trading psychology, risk management, and long-term consistency. Because trading isn't just about charts. It's about mindset, discipline, and execution over time. Our main courses include smart money concepts, ICT, technical analysis, trading psychology, and Wyckoff. Alongside that, we share insights from respected traders whose work helps you understand how markets really behave. Thanks for watching, and I'll see you in the next video.